Audio check, one, two, three. All right, good morning and welcome. It's Wednesday. It's time for Strategy Planner session, and kind of an interesting overnight, even though there's no real interesting implications other than the low. The low overnight, 56.18. An homage or a recognition that yesterday afternoon's bias down signal, which was 56.18, which was triggered and had put into play its 56.04 bias down target, was probed above. It was recovered prematurely during the bias down window. This probe back above it, can we still see it on the 1 minute? There it is. Was premature because it developed during the bias down window. So that basically doomed it to failure. And it was retraced to within 3 to 6 ticks by yesterday's close, if not at yesterday's close, and then actually touched at Globex's open, underscoring its, first of all, its relevance, but also that, in fact, these were weak-handed buyers. Weak-handed buyers that were pretty productive. So is that a pattern or context or just an insight that we can imprint in advance onto today's session? And how? Well, and I'm sorry, a little bookkeeping. There was a typo in the version of the bias parameters that were sent out, but you can see on screen the bias up target, not 36.46. I'm going to get rid of this. So how would we note that or be aware of that weak-handed buying pressure being so productive? Those are the two characteristics that I'd take from that. And that is that sellers are willing to be pretty patient. And it's not a new lesson from the market. Sellers were pretty patient going into yesterday's, or going through yesterday's open. They let buyers have a pretty big run here. That's the first half hour. That's the first two 15-minute checkpoints. Whatever the first 15-minute checkpoint does, trends directly in one direction or the other, or discernible trending, or ranges, fluctuates, whatever it is, there's a range. And the second 15-minute window probed it right away. However that second 15 minutes lapses at 10 o'clock, it probed the first 15-minute range, and so at that point, retracing that first 15-minute range is 61.8%, or by 61.8%, is a sell. There's just no bullish reason at that point to reverse that deeply. And in this case, the second 15-minute window extended even higher, ended higher, above the first 15-minute range. And that is trending. That's like one hand clapping. It doesn't actually give us any further insight. It gives us context to gauge a reaction to. The trend is your friend until the end. It gets the benefit of the doubt until rejected, and this one got rejected pretty quickly. Let's just look at this. So here's the open. Got rejected pretty quickly. It had peaked. It actually was just intended to neutralize one piece of unfinished business above just by touching 56.30 post-open. That the objective would be to probe 56.43. There was higher potential. Keep that in mind for a moment. But that's all sellers needed to come out of the woodwork or to stop being patient. And that's all that buyers could defend, by the way, before sellers dropped the hammer. And by extending even higher, there was a higher trigger for a reversal enabled. So, and then of course they went on to trigger reverse bias, putting into play the bias offsetting test of the bias down signal and so on, which was then likely to define the morning's low, as it suddenly out of the blue did, and ultimately defined a lot of yesterday's low. But for these sellers, who apparently were too impatient, they were able to put into play an attraction below it, 5604, but not fulfill it. So we throw that all into the pot, and what are we seeing overnight? We're seeing the same thing. We're seeing 5618 still standing as support, still underscoring that the market needed to retrace it because those were weak-handed buyers, but also underscoring that sellers are willing to be patient and let those weak-handed buyers keep distributing. And that may entail a higher high. Again, 5643 likely to be probed. This is a dead trade. I mean, this setup is done, but just to remind, once 5630 was touched intraday, and 5643 was probed, and that was enough to bring sellers out of the woodwork, but it's not enough to bring strong enough handed sellers out of the woodwork to push price back down. They're laying the groundwork, putting into play and leaving outstanding this unfinished business. But we should be prepared for weak-handed buyers to be given a little more room. And if there was room yesterday to probe 43 more substantially, they may be able to do it today. It's not up to them. It's not up to buyers. It's up to sellers stepping back. Stronger-handed sellers being patient. That's a characteristic. So, bias up, if triggered, would put into play 46. I wouldn't be surprised to see that probed, get through 48, and we're probably heading to what would have been in play yesterday had the bias up signal triggered through 1015. 5653. But this is just a real quick big picture look. This is all in the name of testing, retesting, and then either rejecting these probes above this critical area. We had defined it previously as 5587 to 5600, the peak of the last collapse. Same area. That one a little skittish in that it only needed to fill the gap or test higher prior lows back to the week prior peak in the same area, but its resistance instead defined as 5616 to 31. And those are landmarks. They can be overlapped. Until closing above them, we're not looking for anything higher. Anything higher being defined as back to the highs. Here's our trend change signal. That's at 74. That's or the high of the signal. The high of the day that triggered the signal. That's the objective on a close above this stuff. So 3031 just being tested intraday or touched intraday had, no longer, but had put into play 43's test, a probe above it. That's done. So no bearish reason to revisit it. Already got the groundwork laid or the attraction below at 5604 if the market wants to reverse down. So if there's no bearish reason to reload up here, it's because the market wants to trend higher or trade higher. So a more substantial probe above 43 like 46, 48, 53 if sellers aren't in control coming out of the open. And more so if buyers are in control, gapping up or even as late as 10:15, triggering bias up. And we'll have, in this setup, actually we won't have an immediately actionable setup, I don't think, unless something develops pretty quickly here. Probably won't have an immediately actionable setup during the first 15 minutes or coming out of the open. I'll certainly try to have something that, an inflection point that can be immediately productive by multiple points. We just, from a sideways overnight range, we're not going to have the reliability that any trigger is just going to extend, either as a reversal or as an extension of overnight action, because there is none, just a range. But get that quick blip up, similar to yesterday. It may not seem like a blip up at the time, a full 15-minute range, and then another one trending up, but not very stable. If that were duplicated, anywhere from 46, 48, 53, any of those being accompanied by something, by RSIs diverging negatively, by a Fibonacci projection's satisfaction but not being exceeded, by a timing window lapsing. We'll be on guard for that to be a peak that reverses down if that does develop. And if that's not rejected, then we're heading to 74. Next. But this is potentially living on borrowed time here, this whole 2-week rally. 2-week plus. So, gap today, by the way, yesterday had no economic reports. Today, after yesterday's, a couple Fed speakers or more, but after yesterday's desert of reports, otherwise, we do have stuff, mostly in the afternoon. The FOMC minute, 20-year auction, FOMC minutes, those are going to be more impactful. There's some curiosity as to the minutes, something that can help fine-tune how to filter economic data that are coming out ahead of the next FOMC meeting, where the big question right now is quarter point or half point. Powell Friday will seemingly help to clarify that. The word is that he'll be leaning on a quarter point. So anything that suggests more economic weakness, which we're not really seeing more than already anticipated, or more than is already discounted, I don't think. But anything that suggests that much, more potential for a half point, that's going to be bullish. Meanwhile, we're sitting up here, potentially topping. So be on the lookout for reports that suggest otherwise. So, and that's this morning. So, meet back here at 9:15. See if we've got... we do have unfinished business above, kind of, yesterday's simultaneously overbought RSIs. At 56.32, 1 minute, 3 minute RSIs were simultaneously overbought. That can be neutralized overnight by retesting it, and that can be neutralized within 3 to 6 ticks. So really it is neutralized. I'm leaving it labeled just to have in focus or have an eye on, really. If we start trending back down and leave all this upside potential behind by gapping down out of the open, by resuming this reaction down, then we'll ignore the 56.32 forever. It may be retested at some point, but not in this sequence and not of our concern for that. So, any questions about any of that, please ask. On Bitcoin, so really still in the range, uptrending support, actually intersecting again. It's been more influential than this channel or this range. Break under the channel that tried to run ultimately has created a trend line. You can take any 2 points and create a trend line. Not until there's a third intersection that's influential can we rely on that being an actual trend line. And it was influential, and it continues to be influential as this channel or this range basically persists. Let's leave that. So, just need to fix this real quickly. There we go. So, just this interim support, interim uptrending support, nothing that's predictive at all, other than to point out the ranges are tightening and a literal, almost literal, explosion or implosion either way, just getting likelier and likelier. The overlaps just aren't the trigger. They can lead to the trigger, develop into the trigger, but just to point out, if you're taking any kind of action, literally, specifically at 61 above or at 58.5 below, just be prepared for that to only be overlapping. I don't know if other than economic data coming out really tomorrow, Thursday and then Friday, what's going to shake this loose otherwise. There's some suspicion, that's probably not the right word, but that a risk-on sentiment or mentality that's been guiding stocks might eke into crypto. I don't think it works like that. They seem to be more competitive with each other. So, Ethereum, just for comparison purposes, still stuck in the same range. Solana, stuck in the same range. But you can see from the slope, it's really a little different perspective. This is the upper end of its range. And it's probed the upper end of its range and come back to test the upper end of its range. If you just cock your head a little diagonally, this would be horizontal. And if I don't know that there's any development that is coming that might help to break this higher, absent the broader crypto market behaving. So, quick look at other markets. Coming into this new data, we've had the dollar continuing down while Aussie has continued higher. No unfinished business above. Pound had a gap outstanding, now filled. So it's just a landmark. It doesn't have to be resistant. Closing above the high of its structure, which you can see the influence, would be bullish. Not necessarily to follow through immediately, but to create an anchor to help absorb a pullback. The euro having overthrown its upside resistance. Nice little tag up. If you can see that little more detail. Break, dip, recover. So it's given persistence to its break, but it is still in need of a pullback. And back under 111.25, really being tested here. The overnight low. Anything lower and we'll anticipate coming down into a deeper pullback. The yen still sitting in its pullback limit, having its own gap outstanding. Gold and silver created gaps above that need to be filled from below. Long bond has a gap outstanding. A lot of this helping to absorb these pullbacks. And then crude oil already on a sell, already having failed a breakout, failed to confirm a breakout actually. Breakout did develop, but then rejected immediately. Reversed, triggered. Look at downtrending resistance, now support. Influential, then attractive again. Basically, just waiting for this channel to be recaptured and then to extend to the lower end of the channel. I don't really have any realistic buy signal. There isn't any realistic expectation. Interesting to see RSI diverging positively under the fresh low. So either, at first that's a call for reinforcements to keep pushing price down, drag RSI back into oversold. But a bigger bounce has room to just work itself out and still resolve down. So the pattern doesn't have a buy signal that I would expect to trigger momentarily, but I'll lower the buy signal after today's session. We'll have more information. At the very least, just to know, here's how much room there is for a bounce without it starting to reverse momentum up. All right, any questions, please ask. But meanwhile, meet back here at 9:15. We'll see what immediately actionable setups are available for the open. Good luck today. All right, good morning again. So as we greet the open, we're sitting back at yesterday afternoon's high, back at the simultaneously overbought RSIs, needing a retest, already having been neutralized closely enough that the unfinished business would have been disqualified. But still, why is the market back up here through the open or at the open? Probably because it wants to probe yesterday morning's high. Again, we're just looking for at least, the predictable to trigger the bias up. If the bias up signal even triggers, would be the bias up target at 46, potentially 48, 53. Now, what if the bias up doesn't trigger? We're going to give it a benefit of the doubt that that's the intent. And so, in other words, having tried to extend higher, having returned to the highs, really anything that breaks this latest consolidation, get its upper quadrant out of 33, really tight. I would look for 33 if pierced to be probed and then retraced. Just to be aware, it could be probed, and probably would be probed by several points, say to 38, and then a dip down to or toward 33. This would be, so here's the bullish scenario. If you trade immediately actionable setups and can manage the stop, 33 targets 38, 38 not assured. But testing 38 is kind of a sweet spot of resistance. Big decision point there. This will be more complicated than a normal setup. I really don't anticipate just plowing through 38. Not the likeliest. Back down to 33, really to 32 or even 31.50. Anything lower, that will have been a false break. And by the way, if the open just starts breaking under 30.31, that takes the break higher off the table. So, pretty complex open here based on sideways ranging, breaking higher, not even breaking higher. It doesn't even qualify as a too late to break because it hasn't broken enough. Just kind of busting at the seams. So looking for an almost literal explosion higher, quick correction, and then resuming the rally if that's the market's intent to trigger bias up, or else rejecting it using that slingshot to snap back down toward 56.04. Any questions, let me know. I'll be right back. So a lot of what happens this morning depends on this open. We're either still in a range or chipping away at its resistance, and chipping away at its resistance may just be a function of producing a false break, stretching the rubber band to snap back down. And that's not to say the rubber band hasn't been stretched enough. And back under 30, I would start to give sellers a benefit of the doubt. Above 33, buyers get a bigger benefit of the doubt. For a quick blip up, say to 38. We never got out above 33, so we haven't yet activated any kind of sell signal. Remember, any inflection point needs to be probed by at least 4 ticks to start a countdown of 4 minutes to establish an extreme whose break would then signal extending in that direction. Reinforcements have arrived. The extension is underway. I'm actually implementing a sell signal to that effect at 28.50. This is in lieu of bouncing through 33 and then being able to reverse back down under 30. Just starting to probe by at least 4 ticks. Under 28.50 would start a countdown. Not quite getting that opens almost literal explosion higher. So, sort of a rock in the hard place. Yeah, the rubber band may already have been stretched and just waiting for the open. Not needing any post-open buyers to be trapped. Just touching or even piercing 28 until pierced by at least 3-4 ticks during the open. There is no actual sell signal test, just testing it as support. There's 33 above, 28 below. Since we're 1/3 of the way through the first 15 minutes of volatility and haven't exploded higher, this setup goes away. Kind of, it's still out there, but it's not the guiding principle. Obviously, the bias up signal having touched the bias up signal post-open, buy sub signal being 29, overlapping it, post-open, or exceeding it. Didn't have to dip down to touch it. But touching 29 post-open or higher means that if it is not rejected through 10:15, that puts into play its bias up target. 46. so the premise is, had the rubber band been stretched enough to snap back down already, then we would have broken back down to 56.28. Had it needed some opening surge, then that opening surge's snap back down would have broken back under 56.31.50, 56.30. So might need a little bit more. We'll still be on top of a sell signal. There's a little bit of an opening surge, really just a blip. All these bars are overlapping each other. Or at least overlapping 33. So no detached bars, no decisiveness here, or decisive probe. Not a very big stretch. 56.28 is still the line in the sand. It was pierced by a tick, so may as well not have touched it at all. May as well have pierced it by 3 ticks. Until 4 ticks actually pierce an inflection, there's no countdown. No countdown to establish the attention span of the weak-handed sponsorship, potentially weak-handed counter-trend sponsorship, making that happen. One minute out from the first 15 minutes of volatility lapsing, and not a whole lot of direction. No momentum. Maintaining a gap up, but right up to resistance. Multiple different forms of resistance. Overnight highs, yesterday afternoon's high, bias up signal. So there's a most recent test of either inflection is this minimum 4-tick probe above it. All 4 minutes don't need to be spent probing it to establish a 4-minute extreme. Here at 35.25, it's being exceeded. 1 or 2 points buffer of noise higher, and we can be confident it's reinforcements. None of that means wait until the final qualifier before participating or being exposed. These are just analyses that give us increasing degrees of confidence in a specific resolution. But twice now, the inflection point has been immediately productive upon first being pierced and then retraced entirely. So I can raise the sell signal, the inflection, a couple of ticks to 28.50. Not a big difference. Maybe it is. The original 28 was touched. It was pierced, but it was at least touched, so I leave that. I wouldn't leave it noted or annotated otherwise. Coming up on the first half hour, the second 15-minute range is going to include a fresh extreme. And because of that, the first 15 minutes range, because it was a fresh high, has a 61.8% retracement down to 60.25, which is essentially a sell signal. It's at least contextually, it's not the most reliable. There's not that big of a, as I've been describing, rubber band stretch snapping back down. So I'm going to pad it a little bit. It's at least contextually bearish, but under 29.75, I'll give sellers every benefit of the doubt that not only have they absorbed buyers, which probably not that difficult here, but that they're actually making their own move to reverse back down. The default otherwise is higher and higher on the path to triggering bias up 20 minutes from now. If the bias up signal is exceeded, it can be reversed and still recovered through 10:15 and trigger. But these blips up above the inflection point, first of all, have been more productive. Secondly, haven't been rejected. So I'm inclined to give buyers every benefit of the doubt on that. And again, if bias up triggers at 10:15, it puts into play 56.45. We'll assess how that's developing because it might also involve 48.53. So first possible cutoff is 38. The inflection, had it been probed at 33, been probed immediately, an immediately actionable probe above 33, could have exploded 5 points, up to 5 points, and then retraced entirely, regardless of the ultimate resolution. Not so much now. That's not the reliable resolution, but 38 is still resistance. Pullback limit is 35. It's certainly possible we get to the bias up target before 10:15, before the bias up signal actually triggers. Pullback limit is now 38.75. It is getting likelier that bias up triggers. I will remind, it was pretty likely yesterday too, around this time at 10 o'clock. Surging a fresh high above the bias up signal, and then by 10:15 it was retraced, and by retracing it, but because it had been tested, put into play an offsetting test of the bias down signal. So the alternation rule suggests that's not going to happen here. Same setup, 2 consecutive opens. Probably the market is either positioned for it to where it doesn't develop, or has some other incentive in mind. We'll let the market tell us what it intends to do, but there's a pullback limit like any other inflection. It's allowed 4 minutes of counter trend detouring, the usual attention span of weak-handed counter trend sponsorship. It can be several ticks, it can be several points or more. When we know what that 4-minute low is, if we can get, in this case, long, close to it, that'll be as close to where we know it's wrong to be long as possible. So pretty attractive. Just a blind entry. Let's say we know this is the 4-minute low at 36.25. 1 or 2 point buffer, room for noise. Comes in around 35.25. A long entry. A limit buy at 35.25. Would be within the realm of the 4-minute test of the pullback limit, a 1 or 2 point buffer, room for noise, and so close to where we'd know it's wrong to be long. Even if it had no greater chance of recovering, which it does because the bias up looks like it's about to trigger. But even if it had no greater chance of recovering, it'd still be compelled to do it because the odds are so good. So the third or fourth minute, testing the pullback limit, the usual attention span of weak-handed counter-trend sponsorship, 1 or 2 point buffer room for noise. By the time the 4 minutes had elapsed, price was higher, but a limit buy down here in the 1 or 2 point buffer room for noise. So close to where we know it's wrong. Wrong to be long. That's what makes it attractive. Not that it's any likelier for that reason to extend higher, but it's the least expensive way to get exposure. So unless something changes here pretty dramatically, pretty quickly at 10:15, this is what it looks like. This triggers a bias up. Bias up, putting into play its bias up target. So it is bias up, and bias up didn't trigger 56.29's bias up signal triggered by exceeding it at 10:15. So the next 60-90 minutes, tracking to its 46 target or higher. Maybe it gets there, maybe it's already reversing down, but 56.29 should define the window's lower end as well. 56.29 should be support for the next hour. Now there is another opportunity if at 10:30 back under the bias signal, back into 56.29, could still invalidate what was cleanly triggered at 10:15. So that's assuming, it's 10:15 now, giving it a benefit of the doubt. We're just so far removed. That said, I've got a sell signal here at 33. We're triggering bias up. First instinct, it looks like a sell signal, of course, but the first instinct with this being a bias up window or on the cusp of triggering. And so much for that. It's a stop at least. That's our stop, if not stop and reverse to short. This is knee-jerk reaction to something, clearly. You have to have a resting stop. Let me just throw that public service announcement out. You're never going to be able to react quickly enough with a mental stop in a situation like this. We know that's a relevant level, so you may place your stop lower if you want, but don't get caught in something like this. As far as the bias up that just was in reach of triggering at 10:15. If the bias up signal had maintained its recovery, instead it's being overlapped within 3 minutes of 10:15. So the bias up signal within 3 minutes of 10:15 is being overlapped, and that has launched the grace period, invoking a grace period through 10:30. Sellers may be right back on track here. Bounce limit is 27. So we had a signal that the market was trying to trigger at 10:15. At the very last minute, invoked the grace period, and by the way, dumped pretty hard. All right, as a sell signal, treating this as a sell signal, it's been probed for 4 minutes. Its 4-minute low is 23.50. Anything lower is reinforcements. And that's our big rubber band stretch, and we're snapping back down. That would be it for the upside. 43, not even touched, attacked to within a tick. Certainly not probed. Not yesterday's high either. It's just a little suspicious. Obviously, this is just all the confusion over the BLS payrolls revisions that are out again, not out, delayed, and the market just basically resetting. But the 4-minute low, until that's broken, it's just a knee-jerk reaction, so highly suspicious. But because of the timing, the bias signal has to wait till 10:30. No way we can avoid headlines. We can have stops sitting out there to protect against too much of a drawdown or reaction. Be prepared to re-enter if, this certainly behaving as if it was a non-event. They do have a way of sucking the oxygen out of the room, getting strong hands to step back and let weak-handed players play it out. But there's a 4-minute high now to testing the bounce limit. If this bounce can stretch back above 38, it'll get a benefit of the doubt that this was just a detour, knee-jerk reaction, by definition, weak-handed sponsorship. Nothing we can do with these but know the relevant levels. Like to see a little dip to 30 before triggering this buy signal, and I'll even lower the buy signal if we can dip to 30, 50. It's not required. A little consolidation here helps before trying to trigger 38. So hesitation short of this buy signal. Reaction short of its potential. Nevertheless, still hovering comfortably back above the bias up signal, with several minutes for the grace period to elapse. And if this is what it looks like at 10:30, then the bias up will trigger. It'll be a late bias up instead of a timely bias up that just 1 minute before 10:15 was in play. Nothing we can do about headlines. Headline reactions are going to develop, but they are either relevant headlines or not, and if not, then the organic influences can get back on track. Maybe another headline is getting loaded right now to come out at 10:29 or even after 10:30. But we have to go with something, and at 10:30, if this is what it looks like, it doesn't have to dip any deeper. The hesitation helps to distinguish the next up leg from this first reaction up. Haven't yet probed 38 by at least 3 or 4 ticks, so there's no countdown underway to establish how much higher after those first 4 minutes would reflect reinforcements arriving. Question, are my targets based on fib relationships or average to range or something else? Combination thereof. We've also got levels of all sorts. In fact, let me show you a quick listing. Well, bear with me. Notice on the left the note card. I'm going to change that out with just all the different levels that contribute. Here we go. So these are all sorts of levels calculable, like Fibonacci retracements, projections, inflection points, my bias signals from previous sessions, for instance, my carryover. Prior supports and resistances that I call lower prior highs or higher prior lows. These are structural. Unfinished business, landmarks that are left outstanding, gaps, opening and closing gaps. They may not be predictive, but they are influential. Notice the timeline below the chart. These are my timing windows, and so extremes of those windows, those can create relevant levels as well, etc. So those, and then basically the trend is going to be important, any unfinished business, but let me just back up or make one announcement here about this. So we're dipping all the way down to the bias up signal. It's after 10:30. So it's too late to invoke another grace period. It's too late, having invoked the grace period, to still overlap or be back to overlapping the bias up signal at 10:30 when the grace period lapsed. That would have triggered a non-bias. That is, the grace period wouldn't have been resolved. This triggered late bias up. When it mattered, the bias up signal ultimately was recovered. It can only be rejected. The premise is that it is bias up. There's my pullback to 1030 or to 56, 30, 50. At after 1030 is even better. Not even a threat or a less threat of reversing down. So pretty attractive long entry down here. We've already triggered bias up. Putting into play the bias up target. 56.46, maybe that develops into something more like 48 or 53. But meanwhile, we just retraced this knee-jerk reaction up. That's as weak-handed as its drop was weak-handed. So those weak-handed legs have a horrible track record of triggering a signal. They can be pretty productive initially. As a case in point, here's an inflection that's probed by this knee-jerk reaction. Pretty productive. But it's weak-handed sponsorship, and so it's not durable. And it's knee-jerk reaction right back up because of the nature of the headlines that are coming at the market. Just as weak-handed. So that's not going to have a great track record for triggering a buy signal. So it's nice to retrace by 61.8%, just to be able to distinguish if there is another up leg, just to be able to distinguish it from the previous up leg, because now this is on further consideration. It's more organic, and it's going to have a better track record of triggering the inflection. The bias is already triggered. The bias was recovered, maintained its recovery through 1030, and its bias up target is in play. It can be invalidated at 1130, by having reversed back under the bias down signal. If sellers can be that productive, that at 11:30 to noon, when the bias window lapses, that they'll have reversed price so extremely as to not just retest the lows, dip a little, dip briefly, whatever it does, but as of that window, maintain the break back under the offsetting test, the bias down signal. We'll give sellers the bigger benefit of the doubt of being stronger-handed. That's what they have to do. Anything else can only trade the probabilities. The probabilities are, if there's another dip, that it is weak-handed sellers. And we'll just keep giving them a benefit of the doubt. They're going to recover. And that's if there is another dip. Meanwhile, here's a nice little pullback. That could be used as a long entry. Bias signal triggered can be used as a long entry. Exceed my inflection above at 38. Exceed it by a set minimum. We're out of the first hours, so 3 ticks now instead of 4. 3 minutes instead of 4 to establish what would be strong-handed. It's rare that we get all individual. I mean, I have so many different observational points. It's rare that they're all going to be in line with each other, but they're also going to be increasingly bullish or bearish or reinforcing or contradicting. All right, there's the bias up target. That's met. It's pretty early, so there's a lot of resistance here, but it is not unlikely to be probed to 48 or even 53 as I described during the strategy planner. But this is a swing target. This was, for instance, the 46 and 48 are part of the same array or cluster of different Fibonacci swings from relevant price points. 46 being the lower end, 48 now touched being the upper end. Not surprising, they're met by the same bar. Pullback limit is now 44. And 44 if it's pierced. Wash, rinse, repeat, the same process. Now out of the first hour, though, only 3 ticks are needed to start the 3-minute countdown to establish how much weak-handed sellers have been able to accomplish. Weak-handed counter-trend sponsorship, usual attention span, 3 minutes. Patient, strong-handed buyers, usual attention span. Or patience, I should say. So long as this is not being rejected, there's potential to 53. This was the reliable, though. The reliable was to test the bias up target. That's done. So if you're trading micro or whatever you're trading in, whatever units of, if you've got broader position, this is a spot to consider locking in, reducing exposure, because there's a lot of buying pressure being satisfied here. Leave a runner just in case, or runners just in case this does extend. It's pretty early. It's still bias up. If you're trading just one unit, you have to guard your profit a little more jealously. Sell into the target. Maybe you get an opportunity to get long again on a pullback limit test. When the odds get back in your favor. The odds are not in favor of entry right here. Not at a target. But let's see the pullback limit. If the pullback limit were probed by a minimum 3 ticks to start a 3-minute countdown, wherever that 3-minute low is, 1 or 2 point buffer, room for noise, anything lower than that would violate the pullback limit. If I can get long down where the pullback limit would be violated and otherwise maintain upside, I'm going to do that all the time, even without knowing what the rest of the analysis suggests. That is still great trade selection. Now, throw into the mix that we are anticipating the potential for extending higher to 53 if 48 gives way as early as it is in the bias up window. Why not? We just had a nice flushing out here at down to 56.30. Took care of whatever this knee-jerk reaction was, the whole economic report boondoggle. Can't wait to see the details on that. Pullback limit is 46. And now 48. And there's 53. Another opportunity to sell into strength if there's still holding a position, any of a position. Still might want to consider some exposure. It's so early in the bias up window. Pullback limit is 50-50. With 1 minute and 3 minute RSIs getting overbought, simultaneously overbought at the high. Reaction down is likely to recover because that historically requires a retest or will be retested, usually sooner rather than later. So I'm not going to get aggressive on a sell signal with that. It's also a bias up window. Now there's a lot of room to the bias up signal. There's literally all this room down to 29 during the bias up window. So long as 29 holds its support during the bias up window, there's all that room for trending back down. I'm not looking for that just to say this is why we consider a sell signal. So the original expectation, to whatever degree the rubber band was going to be stretched, if we were going to know that it was just being stretched or not, as the open developed and more behaviors suggested sellers weren't overwhelming or overcoming, the upside triggering bias up, testing 46, 48, maybe 53, all became likelier and likelier. That doesn't prevent. This can broadside us, and it may look like it came out fine, so nobody needed to stop, and that's just not true because we don't know that this would have come out fine. We just, as a business practice, need to be clear-headed, which you cannot be if you're exposed to this drop or this volatility. Better to not be exposed and to be trying to exploit it or interpret it to try and exploit it for an entry, re-entry perhaps. There can be a cost to that, and it's worth it. So right now, the predictable is done. The predictable being to being to retest yesterday's highs. That is, if sellers weren't taking control immediately, which they weren't, and so the remaining predictable of those two possible paths at the open, we may be on our way to 74 at this point. Today's close will be the final deciding factor as far as that goes. So, but as far as the predictable, and sometimes that's it. Sometimes that's all the market will do is the predictable, and the rest of the scenario is, or are, I should say, because there's two templates here. One is that this has now cleared or is in the process of clearing the way through the 30s, through the 40s, on the way to 74. The other is that this is, as I've been describing, just a rubber band stretch. Yesterday's didn't get it done. It was a warning shot across the bow. It created unfinished business below to help find the path back down. So this is actually premature. If you're taking this sell signal, know that it is premature. We're just testing a pullback limit. I've already pointed out that the reliable or even the predictable was done. The potential was done at 53. So exposure should have been nothing to very limited. And any responsible stop is already triggered. But just because you were flat going into this sell signal doesn't mean you take it. If you did take it, if that's your trading style, then know that it has yet to prove that it is actually gaining traction. The first 3 minutes of testing the pullback limit, no matter how substantial, can still be weak-handed and absorbed. So we haven't even established the 3-minute low. Usually we're going to see in the most bearish, or in a bearish scenario, we're going to see a bounce back to the inflection and then resolve down. I can't assure that. Sometimes we have to just miss a trade. Sure doesn't look like this one wants to give us that opportunity. Bounce limit is 32. A lot of support in here around 30. It's been a very influential number just this morning, but ongoing as well. So pretty important if this reversal is productive, maintaining a break back under 30, 32. Just to point out, though, this is a bias up window. And we're still deep in the heart of the bias up. The bias up doesn't start lapsing until 11:30. We're not even at 11. So this bias up signal at 29 should define the window's lower end. Maybe it's going to be overlapped, but it is otherwise likely to define the lower end, like just be overlapped. This is no bias trending right now, or bias up counter trending, I should say. Let me get a. So there's a lot to get out here. Counter bias trending, this is a bias up window. The bias up signal should define its lower end if tested. It doesn't prevent this, but by the time the window lapses, 29 should be recovered. And if not, it will require being retraced. Whatever develops in the interim almost. Bounce limit is 24.50. So this isn't usual behavior to this extreme during a bias up. Right, so it's a knee-jerk reaction, which even adds to its weak-handed sponsorship. Another reason to expect that ultimately, since this is weak-handed selling, since organically the bias already established a floor at 29, maybe we're using the metaphor of a, stop me if you've heard this one, speeding car down the highway, slams on the brakes, skids up on the shoulder. This is the shoulder. This is the shoulder. Speeding down the highway, slamming on the brakes, coming up on the shoulder, but settling back in the lane. That's what we're anticipating because of the timing of this. Now, having said that, it can still be rejected. Remember, I described earlier the bias could be rejected if sellers were so substantial that they could break back under the bias down signal through 11:30. Actually, now that they've actually satisfied the bias up target, it's that much easier. That was with the bias up target outstanding. That said, there's been a fresh post 10:15 high, 10:30 high for that matter. So it's going to be difficult taking sellers seriously, these sellers immediately seriously, unless they're also able to reject the bias down target. But they've currently got the ball. So if I have a high degree of confidence, or a reason to suspect at least, that the bias up signal is going to be recovered, maybe even that we're going to extend to what our overbought RSI is at the high, at 55. Not that we're going to get there today or ever, but if that's an attraction anyway, fighting against, there's sponsorship defending against that. So if I've got that reason to anticipate that, I'll definitely want to get involved. It's a bias up window, of all things. This isn't a counter trend bounce that I'm interested in playing. Now, its bounce limit was probed for 3 minutes, up to 27. 1 or 2 point buffer room for noise. Call it 28. Now, is this so substantial? Remember what I was saying earlier, especially during Strategy Planner? I believe it was strategy. Was it Strategy Planner or the pre-open update? Watch the economic reports, because if they give any reason to take pressure off the Fed to cut rates by a half point, which is the current argument, is it a quarter point or a half point, and a downward revision in employment kind of takes the pressure off the Fed to cut, period. Maybe not, but to the extent of cutting 2 quarter points instead of just 1. So there it is. And now it's discounted. The market knows about it. It adjusted for it. And now it can get back to business. One of those items on its agenda is to correct. This is a knee-jerk reaction to a headline. Often that's going to be corrected by 61.8%. At the very least, we know there's an attraction to 29. Price-wise. Often, we're going to get back to the 120 or 1015 print as well. That's not a big deal here. Done. That may even serve to have stretched the rubber band to snap back up. Often a headline reaction, the knee-jerk reaction to a headline, is going to be retraced by 61.8%. As I said, that's 39.50. None of those are required except for the bias up signal defining the window's lower end. When the bias window lapses, it starts lapsing at 11:30, it can give way. It's free to give way. And maybe it already will have and just needs to be recovered. But if we're sitting here at the bias up signal at 11:30, then it will have done its job and it can retire. But right now I'm looking at 28. It's not the first reaction up off the previous trend's extreme. There's congestion here. It's almost a double bottom, if not a close quarters double bottom, a little too tight or compact, really. It hasn't even been probed by 3 ticks, so there's no countdown. But we have these other totally separate from the bias, totally separate from the from anything. Is that this was a knee-jerk reaction to a headline, and often it's going to be retraced by 61.8%. Whatever happens from there. So, do I have the right inflection on a recovery? I think so. It's being pretty influential right now. So I'm going to get this in the blog, but bottom line is, with the headlines, it's been a twisted path higher, but the market seems or may be in the process of, again, stretching the rubber band to snap back down, but even more importantly, holding this retest of these prior highs to end this 2.5 week long bounce that has unfinished business below, still requiring a retest. Not that the first reaction down gets there or not. First things first. And that is what we already knew going into yesterday's session. The air was getting thin up here. Too optimistic in facing down this too dangerous area or areas. Good for them. Nice, strong, brave, but ultimately meaning that they are impatient And it's not at their strength, it's at the patience of sellers, letting them have more rope to hang themselves. And maybe it gets to 74, but that's going to need to overcome what we're already seeing, and that is that buyers are weaker handed than sellers. Near term, there's other stuff developing. I don't know the path. Even if I knew with 100% certainty this intended to resolve down, I don't know the path there. It could involve retesting 55, where overbought RSIs require an eventual retest. Yesterday afternoon's 56.32, simultaneously overbought 1 minute and 3 minute RSIs required an eventual retest. It took a while before actually testing. Not as big or as sentimental of a detour. So that's the one thing that is potentially bullish. And that is that this is a knee-jerk reaction to a headline that originated from an otherwise strongly led market. So these sellers have to prove to be stronger handed than that. That's going to come down to the timing window, which we don't know yet. I'm willing to dismiss or at least ignore any attraction back to overbought RSIs, but not so much an attraction back to the bias up signal. So if the bias window lapses, and if it still needs to neutralize, goes ahead and neutralizes the bias up signal, or if it has already neutralized the bias up signal's attraction, but then coming out of that, resume the decline to fresh lows, I'll give those sellers every benefit of the doubt, whatever their objective. Maybe 55 is eventually met or not, but it won't be a deal killer for establishing or developing into a deeper reversal down. What would the alternation rule have to say about the resolution of the pattern that looks the same as yesterday morning? Good question. Does it, though? So there's only so many behaviors. The alternation rule has to be applied to a combination of those behaviors, not to any single one. So a surge that reverses is going to be a little too simplistic for the alternation rule to speak to. So this was what I'm looking at with different features is the probe above the bias up signal, it's there, and then not triggering bias up. Today triggered bias up. So immediately those features just they don't allow applying the alternation rule because they're not the same setup. Reverse bias, bias up. But singular surge, multiple surges. Too many differentials. If there had just been one probe and its rejection, and this is why I was saying at the time the alternation rule probably wasn't playing on that first probe above this morning's bias up signal, that being rejected, that was unlikely because that is what developed yesterday. But now that's gone on to recover and to trigger bias up. So alternation rule doesn't play. Right now I'm looking for a 61.8 retracement of the knee-jerk reaction to the headline, while the bias up signal defines the lower end of this window. It doesn't have to break lower when the bias window starts lapsing. It just shouldn't before then, not durably. And then at 39.50, maybe we get back to the highs. We'll take a look at it then. Be right back. pullback limit is 33.75. So the usual or common 61.8% retracement of a headline knee-jerk reaction having nothing to do with anything else, assuming this is where it's originating, and we had a lot of behavior here that suggested it would. That doesn't have to be met, but it's an attraction, meanwhile, that can be used to arbitrage against current pricing and how big of a stop would be needed to control the risk. And now stops can be adjusted higher. That's the predictable. And by the way, triggering a stop is a predictable too. It can be exceeded as well. But so long as the pullback limit's holding, I'm expecting 39.50. If the pullback limit is violated deeper than its first 3-minute dip, we'll be looking for a new setup. Whether that's to finally recover this, or extend. If you want to get a email copy of the blog post that's emailed to members, I'm about to send another one out. Just email me, rod@viditrade.com. rod@viditrade.com, and I'll just send it to you as well. And any questions, keep them coming. Let me know if I didn't answer the original one well enough. So by the way, having recovered the bias down or bias up signal in a bias up window, which no longer counter bias trending, that gave us a high degree of confidence this would hold. Yesterday we had a reverse bias, not a bias up, but a reverse bias that rejected a test above the bias up signal through 10:15 instead of maintaining it or recovering it through 10:30. And that consequence is an offsetting test of its bias down signal. Like the consequence of triggering bias up is to reach the bias up target. Either way though, this is this bias window, not a bias up, not a bias down. So the bias signals should define either end of the window. And this is 10:30, an entire hour left outstanding. And that was supposed to suddenly step out of nowhere and support this range, define the window's lower end when it's being met with so much concerted selling pressure. And yeah, this is what it looked like. It's not pretty, but ultimately it defines the window's lower end, just as today's bias up signal in a bias up window being probed prematurely should define this window's lower end, and is. And now being within view of the bias window lapsing doesn't have to. So is this the end of the bounce? We didn't get a 61.8, we got a 50%. I'll give this a benefit of the doubt that it intends to extend at least a little bit higher, maybe more. But if the pullback were violated and then breaking back under 28.50, really difficult to do that. at that point. So if you took the trade, the expectation for a 38 or a 61.8 retracement, just the attraction to it, you don't have to hold it to the bitter end, either meeting the target or being stopped out. The only predictable, this isn't a requirement, so the only predictable in this trade is that right now you can get 56.35 for it. But if holding, be sure to have some risk control measure, a stop somewhere, reflecting at the very least your own risk tolerance. It's a little tight, but there's a pullback limit down to 33.50. There's a minimum 3 ticks. Barely gets in there. 1 or 2 point buffer room for noise. According to the 3x3 or 4x4 during the first hour, but that tactic says you buy that. And that's regardless of any greater likelihood for it playing out, for it being profitable. We happen to have other analysis that suggests it will be. That is, in this case, 61.8% retracement of a knee-jerk reaction to a headline is common. So along down here at 33, so close to not just the 3-minute low, but it's 1 or 2 point buffer room for noise, call it 31. 2 point risk. We're looking for at least a 1 to 3 risk to reward. So 6 points off of 33 up to 39, pretty much. So it just makes it, qualifies as a long entry. It's not, for that reason, any likelier to play out to the upside. It's just an attractive way to play it. Attractively priced way. All right, let's look at a few stocks. NVIDIA overlapping my bounce limit. So back under 122.50 should reinstate downside momentum. But anyway, that's part of a hedge against AMD, or for AMD long. Target reacting sharply right up to uptrending resistance. Back to the highs, fresh recovery highs nominally, but printing 44.50. We've had 2 entries highlighted at 38 and then last Monday morning. Palantir latest entry was last Monday morning, up to fresh highs. I don't view this yet as any of this, the prior rally either, prior up leg, as that universal awareness session that we're just waiting on. This is just so much coiling, relentless, eking higher, not suddenly being driven higher by multiple points for multiple consecutive sessions. That's the kind of day I'm looking for. PayPal fresh highs. I think it's the first 70 print. No, 70 print in the last prior earnings. Papa John's holding strong. It doesn't have to pull back. That pullback potential is there, that room for a pullback. Corning, I think this pullback we already knew was done or was likely done. I think that's pretty generally aware. And then Rocket Mortgage looking at $20 coming up. All right. This is a stop. This has to be stopped. You can't be exposed to this. We don't know that this is going to develop into just a better flag continuation. It's 3-minute lows being probed. I mean, if you're willing to tolerate that much risk, there's some parallel support, but I really don't like the timing of the slope down. This was just a attractively priced way to play the 56.39.50 bounce, which may still develop. And really, back above 34.25, back above 34.25 would suggest is back underway. That whatever had motivated this extra little dip was done. I'll still consider a buy signal above 34.50, maybe lower. But the bias window is lapsing. The bias up signal no longer required to define the window's lower end because the window no longer exists. It's lapsed. Bounce limit is 25.25. So being noon, not quite fresh session lows entering the noon hour. So still defensible. Bounce limit is 23.25. And I'll get more aggressive on a buy signal. Right now, though, giving sellers every benefit of the doubt. And turning around the PM bias parameters momentarily. So remember, you can email me and I will send you the blog posts that are going to members. I'll put some stuff in context. But the reason I made this a full day instead of 2 mornings is I'm expecting a pretty dramatic session in here. So far, I mean, it's just tough with the headlines. You have to be a trader too. You have to have a resting stop. You've got to have skills, at least to some degree, and then I'll complete the equation, or further complete the equation with some pretty compelling levels. Pretty actionable, reliable. Bounce limit is now 20. And just a general outlook. The anticipation that the morning was biased up. The likelihood to hold or be defined at the lower end. What happens when the window lapses, as it has now, at noon. Bounce limit is 56.18. Also, we already know where we're going. We know our objective. So this is, I'll have the bias parameters up shortly for the afternoon, but remember, yesterday afternoon's bias down target was left outstanding at 56.04. So we're running into resistance. You can see it on the 3-minute chart. It is this afternoon's bias up signal. Sellers ran into support at the morning's bias down signal. There's no actual unfinished business above. It still wouldn't be surprising to get that 61.8 retracement of the headlines knee-jerk reaction done. There was a 50% retracement, which is a minimum. But 61.8 is more common, so I wouldn't be surprised to see that. But meanwhile, trigger bias up could even put into play a retest of the high. Overbought RSIs at the high want to be retested. Yes, overbought, exactly. Overbought RSIs. If we get into the orbit of its high, which would be not just the 61.8 retracement, but that would be a good start. Start retracing that 61.8. Get through that, then we're in the orbit of the origin of that knee-jerk reaction to the headline. All right, I'll keep raising the pullback limit behind, but also the sell signal. If bias up doesn't trigger, and that's at 120, and this is a no bias window, then this is the range for the afternoon. So need to trigger bias up to get back out of here to the upside. Or probe it before 120 and already retrace it. So this is a prior high that's just a structural resistance. It can still be durable. Pullback limit is 37.75 or 33.75. It can still be durable, but very often it'll be just obligatory resistance. In other words, everybody knows it was there. We've traveled all this way to get back there. Suddenly responding to it out of nowhere, often that's just because everybody knows it's there. And it has a ineffectually pessimistic reaction and then is probed. That's often going to be the case. Pullback limit will tell us whether or not, but I am able to raise the sell signal just in case if that pullback limit starts being probed. All right, back to that. The bias window, the bias timing window triggers in 10 minutes. If it doesn't trigger, then obviously 41 and the bias up target 42 and probably 55 for that matter all come into play. So big test here, big window for sellers if they're going to prevent that. They're going to do it here. They're going to do it now. And they're going to do it quickly. So they can't afford to see price get too much further removed from the bias up signal. Not as much closer as we're getting with every minute to 120. And probably not going to be enough just to dip back down to the bias up signal, but back through it to avoid triggering it. So if sellers are going to prevent further upside or any of these upside attractions, 41, 42, 55, at least at this time, then they need to be productive here and now and a lot. So it is official. If you look at the 3-minute chart, it's 120. We're entering the bias window, the PM bias window, above the bias up signal. So the bias up target is in play. Extend through that, and we could get back to the morning's highs simultaneously overbought RSIs at the high that require a retest. Otherwise, break back down through 31, through the bias up signal, through 130 would invalidate the bias up. So I'll be getting a little bit more aggressive right now. If there's any sudden weakness, I'm going to give sellers that benefit of the strength. But after the bottom of the hour, if it's not even being attempted coming into the bottom of the hour, not actionable. Yeah, and you could just glance at the chart. That's what it's for. Is the reds? You don't always see them all, so that can be confusing. But the two lower reds are the bias downs. Two higher greens are the bias ups. Bias signals. So right now we're above the bias up signal, and that is putting into play the bias up target. Bias up. Getting a little coiling here. The pullback limit now being pierced, overlapped, not actually probed by a minimum 3 ticks. So we can't start a 3-minute countdown. Often, first of all, continuation pattern means trending up, consolidation, whether it's sideways, pennant, parallel, downtrending, dip, flag, combination of the two, falling wedge. Doesn't really matter what it is, just a brief overlapping consolidation, some retracement, while there's perhaps a small change in sponsorship. But it's the same regime basically trying to extend higher. So this is likely the next significant resolution. I say significant because occasionally and often enough, despite being a continuation pattern, this can first reverse. In other words, this lower end can break lower first. And that's why I'm not getting too aggressive on the sell signal. I want to give some room here for the pullback limit if it wants to be. Maybe it's breaking higher now, but I would still allow 3 ticks to start our countdown for 3 minutes to establish counter trend sponsorships, attention span lapsing, so it could snap back up. So still just giving buyers a bigger benefit of the doubt. That's one of their benefits, one of the perks of triggering bias up. So it's not quite a flag any longer. I mean, it certainly has the downward slope parallel where it was more wedge-like initially. It's more of a channel at this point, but we'll give it a flag label. Still a continuation, but the longer that the whatever it is, continuation, wedge, flag, pennant takes to develop, the more that it becomes a channel, and its continuation becomes more temporary. Now, if this were developing at a bottom, if this had been a low and then a bounce and a flag right here, well, that would be something else. But this is already after having retraced, not arbitrarily, but back to a prior high. Not an arbitrary prior high. I mean, that prior high produced a fresh low. The market chose this spot to do that. So it's intending to do what it has already signaled. I mean, this is just more behavior that tells us it's going to follow through on its promise, basically. But that's a traction at this point. Less so of a continuation or durable continuation, and now more of mass, more congestion, overlap, basically having its own magnetic pull, its own orbit. Attempts to break free from it are much more difficult the longer that it takes. So still likely to behave, at least initially and maybe only initially, as a continuation, but then likelier, unlike a continuation, which would just consolidate and continue. In this case, since it is more of an elaborate pattern, protracted, it's likelier to retrace. Now that retracement, that's the question. That answer could be known in advance based on where that retracement comes from. So for instance, if this were to extend to the 56.42 bias up target, and then retrace, a little less likely that it holds, all that buying pressure having been satisfied. So we'll see what kind of pace it's on, how impatient buyers are. Not coincidentally, we've got FOMC minutes coming out momentarily. Pullback limit is 35.50. Just some interesting behaviors that we know about patterns, and just because they form something, just because something forms, say a flag, until it breaks, we don't really want to rely too heavily on what it is, because it can morph into something else, and that can totally change the likely outcome. And that's my small talk before FOMC minutes. Any questions, let me know. bias up target met. Now, the bias up target is not resistance other than it is satisfying buying pressure to a degree. That's what it's derived from. I measure patterns, relevant patterns, and by the way, pullback limit is 42. And identify basically the more significant levels that would satisfy the accumulation that I measure in those patterns. And often there's going to be a cluster. In other words, I derive a singular numerical representation of that cluster. That's the bias up target. So when you satisfy buying pressure to a degree, you don't need increased selling pressure for price to fall because there's fewer buyers. They're satisfied. That's somewhat resistance. It's a little different than the resistance that would form from increased selling pressure, not just relatively increased, but more absolute selling pressure. So, unlike the bias up signal that was required to hold as support during the bias up window, the bias up target could be exceeded. That's not our defining resistance. Now, this is a knee-jerk reaction to news. The first 60 to 90 seconds following the news, that's weak-handed knee-jerk reaction. Strong hands aren't reacting to FOMC minutes to the degree that they're pushing the market around. This is more a reflection of sentiment. But the predictable, the reliable, to the degree that anything's reliable in the market, was the bias up target. Since the bias up signal triggered and put it into play, it's met, it's neutralized, its attraction is done. So anything higher depends on maintaining, for instance, this recovery, or probe at least, above this prior high. See how it's serving as support now? That's the top of the channel. Little blip down. Basically, I could be a little more generous to these errant ticks and have a different slope, and you can see the errant or sentiment extreme on the reaction down. It's all noise, really, but in other words, we've come back down to the channel as expected from whatever it was able to produce initially. And now we know that we're reversing back to the channel after neutralizing the upside attraction. So extending higher is possible even though the bias up target is met. But the bias up target is met, so extending higher requires more sponsorship or reinforcements. There's the pullback limit. Usual attention span of weak-handed counter-trend sponsorship, 3 minutes. There's the 3-minute low down at 36. Under 36, or at least 1 or 2 point buffer room for noise, which is really narrow right here. So actually 35. I could get this aggressive on a sell signal. It's actually, I'm sorry, 34.75. My sell signal is under 34.75. So if I could buy, I mean, it's already 3 minutes out and we're bouncing already. All 3 minutes don't need to be spent testing the pullback limit. So by the time we get to the end of the 3 minutes, we may have already recovered. In this case, we did. So it's not that attractive just because the 3 minutes has run its course to just get long. Just because the usual attention span of weak-handed counter-trend sponsorship has elapsed. We want to see if we can get long as close to where we know it's wrong to be long. And then, of course, not only honor the stop, but the stop and reverse to short. So I'm willing to, if we get the opportunity, and we are, price is moving faster than I'm talking, getting the opportunity on a retest of that 3-minute low for a long limit buy down here around 35.50. The the potentiality being to maintain the upside, extend it. We're back into the orbit, basically, of the knee-jerk reaction to the headline. We've already retraced now the 61.8%. Natural resistance there. Notice that its retracement was exceeded only by knee-jerk reaction to another headline. That's what it took to exceed it. Yeah, there's no reason to retrace the origin of this dip, the knee-jerk reactions peak. So if it is retraced, it's already been corrected by 61.8% itself to within a tick. So if this FOMC reactions high were retraced, we'd assume that's because the market intends to extend higher. It doesn't need to tag up, retrace, retest. And what does that put us in the orbit of? Overbought RSIs at the high. So just hold that 3-minute low, the retest, just because we were given the opportunity to get that 3-minute lows retest, get long at it, just because it's seemingly holding and firming and it's profitable, does not at all prevent suddenly collapsing from here. Have a stop, a resting stop, not a mental stop. Collapsing means collapsing, and on a day like today, it means it more than ever, and more so. You won't be able to pull the trigger fast enough if you see your preferable stop start to be tested. B, because you weren't able to pull it fast enough and something like this developed, it'll be so far removed, you'll talk yourself into holding for a bounce. Holding for a bounce, holding for a bounce, holding for a bounce. Doesn't work like that. Rather be flat and looking or stalking re-entry with a clear mind. All right, so there's a big bounce. This is a hurdle, the pullback limit that was calculable off of the FOMC reaction or the minutes high, knee-jerk reaction high. It's a very real level. Not just a landmark to start our countdown, but it is now from below its resistance. If it were probed for too long, deeper than its first 3 minutes established an attention span. If it were probed any deeper, then that would have been the trigger to indicate that momentum was reversing down. So it's a big hurdle and big achievement to recover it. The reward in this case being to return to the next, structurally the next higher high. It just so happens that the next higher high, this is the 1-minute chart on the right and the 3-minute chart on the left, both 1-minute and 3-minute RSIs were overbought at the high. And that just doesn't happen. Maybe in a knee-jerk reaction to news, and that's irrelevant. That's by definition weak-handed sponsorship, reacting to news. But organically, this is a concerted effort. This is, upon further consideration, a little pause and still extends higher. That's not just a knee-jerk reaction. That's organic enough that to have produced simultaneously overbought 1-minute and 3-minute RSIs requires its retest. That's the product of pretty much all available strong-handed sponsorship, meaning that its reversal is the product of weak-handed sponsorship. Weak-handed sponsorship isn't durable. So it historically is pretty much always retraced. We just don't know when or from where. Usually, much more often, it's much sooner rather than later. And so anytime I get a buy signal, if I'm anywhere in proximity to it, that's my reward for a risk-reward equation. So from 56.36, 56.35 entry, I'm looking for 20 points to retrace the high. My own trading plan, let's say, only entertains entries that have a 1 to 3 risk to reward. So if that's my reward, 20 points, let's use round numbers. So let's say 21 points. We got it at 35. And we're not just looking to retrace 55.25, but actually overlap it. So 56. So 21 point profit objective reward. And I've got a 1 to 3 risk to reward minimum criteria. Can I manage 7 points of drawdown? Does that make it worthwhile? It does. Of course, now I want to also entertain. Now I also want to entertain, do I even want to hold a 7-point drawdown? The answer to that's no, but I'll just set a tighter stop. In fact, we're so close to the stop, let alone stop and reverse to short, that it ultimately works out to about a 1 to 10 risk to reward. So we've got a 1 to 10 risk to reward. Forget about it being any likelier to actually recover. Yes, we have other analyses that tell us it's likelier to recover. Ignoring that for a moment, a stream of 1 to 10 risk to reward setups don't need to be overwhelmingly successful to be overwhelmingly profitable. One more word on that. That's only the case if you honor the stop. The reward is not any likelier than to be stopped out, but the stop, the risk control is irrelevant if it's not actually acted upon. And getting back to what I started with, if you're looking at a mental stop that's waiting on you to pull the trigger, instead of a resting stop that you can rely on triggering automatically, and then always re-enter if that turned out to be just a false break, knee-jerk reaction to something else. Without that actual implementation, the risk-reward equation is irrelevant. All right, there's nothing really to infer from this delay in resolving. Just because more sellers haven't been attracted or more buyers, either one. The range is irrelevant at this particular timing window. It is not coincidental that you see, if you look at the 3-minute chart, that you see the bias up target being so influential. I mean, the bias up target is 42. And except for the FOMC minutes knee-jerk reaction, 42, not only holding, but repeatedly attracting price to it and then repelling price back from it. So I like to see that. It helps to confirm that I have the right calculation. You know, this is based on patterns that developed by noon. That's the bias up target. And recovering the bias up signal through 120 is what put it into play officially. So it looks really cool. I like it for that reason. I also like it because it tells me I'm looking at the right pattern or patterns and the right Fibonacci projections from them, because there are other expectations from that those same array of swings. If this does resolve up, we're going to be able to be pretty specific on the next candidates for turning points. So all we can do is trade probabilities. We can trace out the different possibilities. Right now, among those possibilities, the more probable is that this intends to resolve up and test 55, whatever the resolution. If the resolution intends to be bearish, in other words, neutralize the attraction back to 55 and still resolve down, at least avoid closing high enough to tell us that this bigger picture intends to extend any higher. That's bearish scenario doesn't have to trigger a sell signal. It just needs to avoid gaining any new upside traction. So if the market's going to get that done and also react to it deeply enough that it can start to gain downside traction, there's a compact and compacting window of time available. So we'll need to see pretty soon a break higher if that's what the market intends, is to neutralize the upside attraction and reject it. So meanwhile, on the downside, just breaking back under 34.75 would start to get a benefit of the doubt for the upside, or for the fluctuation, let's call it at the moment, to have reached its upper end. And even if it intended to resolve up or return to this morning's high, may still need to refuel. It does still have unfinished business below at 56.04 left outstanding yesterday. So, if it sounds like I'm just talking to try and drag things out, that's because really I'm just talking to try to drag things out. I'm kind of hoping to have seen a resolution by now. So, any questions, let me know. I'll be right back. Don't forget, if you're a guest in the YouTube simulcast, today's special one-day event, and you'd like to see the blog post that is sent to members for each day, plus 2 blog posts that are the AM and PM bias parameters that we've been discussing, but also the narrative that describes the vidiTrade methodology, why it is developing the way it is, what it's expecting, and just a reference for the specific levels. If you'd like to see that, just email me, rod@viditrade.com, and I will send you your own copy. And I will, before I forget, just to point out, we'll be offering a special sign-up deal. If you're at all interested, when you actually become a member, you have access to the knowledge base, all these setups. We're actually we're just barely looking at any of the setups. The bias parameters is a big feature. There are so many other setups. I think we looked at counter bias trending. That's a function of the bias parameters. But there are other setups that are unrelated but still very insightful to be able to anticipate price action, to be able to interpret what the market's doing, and then understand what it intends to do about it, and how to derive actionable parameters, calculate your risk to reward based on that. But you have access to the knowledge base, which is interesting. It lists all of the different setups. It describes them and has images to be able to compare. And it also includes years of historical references of their prior occurrences. They, believe it or not, don't all develop in exactly the same way. So I can label a setup. That's the note cards that you've seen, the smaller ones, that I'll display over here in the sidebar. And you can go to the knowledge base, reference that setup, and using your own charting software, you can do this even away from the trading day, just in your own effort to learn the methodology, research or review the different setups and see how they're similar, see how they may be different. The closer you can get to seeing what I see, and the more intuitive it becomes, the more you're kind of trite to say, but at one with the market and able to understand its intent, and able to understand when it's confused as well. Huge swings this morning. I mean, the levels are interesting, but that doesn't mean they're tradable. But they can still be predictive and insightful. So still paused here, basically. I'm not inferring anything from this. The delay, or had this resolved up without a delay, or resolved down without a delay. Either way. But it is nevertheless becoming something, forming all this congestion. Recall our conversation about the channel that had formed. Lots of congestion. It basically becomes a mass. Think of a planetary object. Try and get out of its orbit, and the gravitational pull brings you right back to it. And that's why before this even broke out, I traced this path. Breaking higher, returning to, and could have extended through that channel. Now this planetary object has basically been replaced by this one. Same thing. Wash, rinse, repeat. Didn't have to spend all this time congesting and overlapping, but now it's going to be difficult to get away from it. That said, it doesn't have to be a brief blip before returning. But as you can see, the inputs neutralizing the upside attraction, having this attraction below outstanding. If we get a surge here, or any kind of rally, probably a surge because of the timing, 60 to 90 minutes left in the, 90 minutes left in the session. Not a lot of time for multiple swings as there were this morning. So as this starts to develop, neutralize the overbought RSI's retest at the high. If that can't be maintained because it's attracted back down to this congestion, the faster that the attraction develops, the more velocity and the more potential to just plummet right through it. Now we're going to have the pullback limit. It's going to trail this up. The 3x3 test will be in play, so anytime a pullback limit or bounce limit, red or green, is probed for by counter trend sponsorship, the usual attention span of 3 minutes. And then, as we just demonstrated on this dip, there's 3 minutes probing back under the pullback limit. When the 3 minutes had elapsed, price was further away from the 3-minute low. Doesn't mean it can't be exploited or that the opportunity won't be presented to exploit it. A limit order can be placed with a stop, immediately executed, bracketed stop in reverse to short, in fact. And maybe we would never have returned to it. Just not every opportunity is going to, just because it's calculable doesn't mean it's going to present. But that's just the trade selection. It doesn't make it any likelier to be profitable. And even if it does start to be profitable, even if this starts probing fresh highs, that doesn't at all ensure returning to the high. So make sure you're trailing a stop behind that. And if it turns out to have been too tight or triggered by a knee-jerk reaction to something temporary, we're stalking it. We can always re-enter long, and I'll have levels identified to do that. So this pullback limit has so far defined the pullback. No new buy signal needed to be triggered in order to resume upside momentum. Upside momentum, it remains intact. On a fresh high, this will have been a productive pullback limit. High enough fresh high, and I'll be able to calculate, as I have been, a higher pullback limit. Or we may need to repurpose this one on a fresh high. This current test becomes irrelevant. The pullback limit is repurposed for another test if it develops before price can extend high enough. So only 1 minute RSI was overbought at this high. 3 minute RSI was not yet overbought. It was on the cusp, but it didn't require a retest. So to be retesting it when it's not required, often that suggests an intent, that the market intends to be more productive than just to tag up and then reverse down. So I'm not inclined to get too aggressive on a sell here. But it is a fresh high, nominally, but a fresh high, and not high enough to calculate a higher pullback limit. So as I was just describing, this one is repurposed. Maybe this extends higher and higher without ever testing this again, but if it were to dip, in fact, we now have a higher pullback limit at 43. And remember, as far as the analysis goes, bar can't be doing both. Bar's reacting down, testing the pullback limit of a buy signal cannot also be triggering a sell signal. And that doesn't mean you can't elect to take the sell signal within the first 3 minutes of testing the pullback limit. which is now 44. But know the limitations. So it's not just numbers, it is also the pattern itself that defines how aggressive the pullback limit can be. In this case, since it's pretty much a singular straight shot higher, not a lot of chop to it, I'm going to be more generous in allowing a reaction down before it even threatens the pullback limit. Which is 45.50. So there's a lot of tactics that can be employed, but at the basis is the 3x3 test. Like the homepage says, if you can count to 3, that's really it. I mean, it's not really all, but it's it for just the basic tactic to exploit the levels. Pullback limit is 48. So if the 61.8 retracement of the headline's knee-jerk reaction is not able to hold as resistance, then often the next reward is to retrace the origin of the knee-jerk reaction. Now remember, my upside for this morning was a minimum of 46, having triggered bias up, probably to be tested up to 48 and potentially to 53, and that was overlapped by 2 points. So even before the headline developed, I was announcing that the predictable, the reliable, and the potential were all satisfied. I had nothing else that was telling us this intended to extend any higher. It could have, they do, but there was nothing reliable or nothing to rely on for that. So that headline could not have hit at a more opportunistic moment for maximum effect. And now it's being reset. So I'm going to raise the sell signal a lot from here, but not terribly close. Coming in at 39.75. Now, not all pullback limit tests are nominal, just a few ticks or even a few points. This is a pullback limit test, and by the time its 3 minutes were elapsed, price was, what is that, 12, 11 and a half points lower. And only then did we get to see that it had reinforcements, substantial reinforcements. So you have to have your own stop working, something that reflects your own risk tolerance. This is a pretty steep reaction, or pretty wide differential from where we just were. So if you have a trailing stop, I assume it's triggered. That has nothing to do with the analysis. Now, this is the first 3 minutes of testing the pullback limit. It's actually the first minute of the first 3 minutes. And the same bars testing a buy signal's pullback limit cannot also trigger a sell signal. The sell signal is disqualified from triggering right now until these 3 minutes have elapsed. Minimum 3 ticks to start the countdown, and then 3 minutes, usual attention span of weak candle counter trend sponsorship, and maybe it develops into something else, and the system, the analysis, misses it. This did. Doesn't mean you can't elect to take a sell signal anyway. But what I'm monitoring for first, as for the purpose of the pullback limits test, more often than not, this is just a gift. You have to have a stop in place to not be sweating it out, and to be able to, with a clear head, be considering a re-entry. And maybe by the time we get to the end of 3 minutes testing the pullback limit, price will have recovered substantially. In any case, so far removed from the 3 minute low that it's not an attractive long entry. The whole point to this is to identify where to enter so close to where we know it's wrong to be long that our loss is limited. That's what this was about. By the time those first 3 minutes had elapsed, price had already bounced away. In this case, a retest offered an opportunity to get in, to get long, take advantage of that. And maybe these 3 minutes, when they've identified their low, which is 4150. Maybe that'll be retested. Often it will be. Occasionally it won't be. But that doesn't mean jump in just because the 3 minutes have elapsed. If the trade misses you, then it's time to start focusing on another trade. Not time to chase it. And given the opportunity, we know where the 3 minute low is, 1 or 2 point buffer, room for noise. A limit order down here is filled. It should also be stopped. Because now, more than 3 minutes out since testing the pullback limit, the 39.75 inflection is being probed by at least 3 ticks. Wash, rinse, repeat. Now we're doing a countdown on this 3 minute test of the sell signal. It's an inflection just like the pullback limit, just like the bounce limit. They're all inflections. They all fall into the 3x3 test until the 3 minute low is exceeded. In testing the sell signal, 3 minutes of counter trend detouring is allowed. You can't be doing both. Can't be testing the sell signals, detouring, and triggering a buy signal. So I'll implement a buy signal as soon as possible. I'm assuming with some other inputs that we just don't have time to get too in the weeds about. I'm assuming this bounce holds 44 if, in fact, this is reversing down now. If this sell signal intends to be productive, this bounce probably holds 44. It doesn't have to. It could extend quite a bit more during these first 3 minutes allowed of detouring. Sellers were able to probe the sell signal by at least 3 ticks, and so they get protection for 3 minutes of counter trend detouring. After after those 3 minutes, back above 44 would qualify as a buy signal. So quite possibly this is just whipsaw, knee-jerk reaction, unfortunate timing. But the premise is that at least a couple or 3 tries should resolve in one direction or another, and enough so to compensate for the whipsaw. Not a requirement to compensate for the whipsaw, but that's the goal. So that's why we stick with it. This might just be a normal reaction, just happened to be from a pretty extended level, having retraced essentially the knee-jerk reaction, so right into resistance once again. Pretty opportunistic moment to lean on it, but still just a knee-jerk reaction. 3 minutes have elapsed, and so any fresh low under the 3-minute low under 37.50 would reflect reinforcements, and sellers would get every benefit of the doubt for retaking control. Maybe just for the rest of today, maybe just for the next blip down or dip down. So the delay here in resolving is irrelevant, but it has scoped out its 3 minutes either way. The sell signal is being tested from 37.50 up to 42, probing beyond either end, especially by more than a 1 or 2 point buffer room for noise, is likely to extend in that direction. So there was an opportunity here, having attacked the high to such a great degree after so much buying pressure expended so relentlessly for so long. Whatever it is that swatted price down had an opportunity to be pretty productive. And yet, The only overlapping of the initial spike down under the inflection, under the sell signal, was itself sentiment extreme, errant ticks. More than the delay, and really not the delay, but that is meaningful. That the sentiment extremes trying to extend down are being absorbed. They're not yet reversing up, but I am lowering the buy signal to 43.25, 56.43.25. With the new information of being able to see that sellers appear to be weak-handed, impatient, and ineffectually pessimistic, not getting anywhere for their effort. And of course, still having unfinished business at 55, 56.55. Willing to get exposed to the potential for a whipsaw. Could be whipsawed right back out to the downside. So a long here, or if we dip back to the lower end of this range again, say a limit buy at 38 with a stop, maybe a stop and reverse to short under 36, 2-point stop. Do I anticipate making more than 3 times that if the trade works out favorably? Well, from 38, yeah, just to get to the buy signal. Great reversals on metals. We'll be talking about those at the market wrap. So these are pretty compact. The 43.25 signal only got up to 44, which until I lowered it was the buy signal previously, the inflection. This little blip down got back down to, appears 39.75, by a tick, not by 3 ticks. And in any case, can't be doing both. Can't be testing a buy signal and triggering a sell signal with the same bars. So even after all of this, I'll still give sellers the benefit of the doubt back under 38. Not in spite of buyers doing pretty much everything that's available to them, which is prevent this inflection, this sell signal from extending, absorbing these weak-handed, impatient sentiment extremes, bouncing back to 43.25, 44's buy signal, inflection, chipping away at its resistance, absorbing this little dip. Not in spite of all that will I still consider taking 38's sell signal, but because of all that, all of what I just listed is buyers expending energy for position to be able to exploit that and produce something more substantial than this pullback or than this peak at 56.51. All of that buying pressure suddenly becomes selling pressure if it can't exploit all of that. If all of this posturing, positioning, absorbing, chipping away still at this point starts reversing down to and through 38. It's not in spite of all this buying that I would look at 38 as a sell. It's because of all that buying that suddenly helps to push price down even more deeply, because those buyers will have failed and something more substantial will be underway. This is called a pivotal trend line. We've got an actual low. The low prior to the actual low I call the pivotal low. And then their interim high. So once their interim high is probed, fluctuated around, and resolves higher, at that point, I know that this is the low of that test. I connect that to my pivotal low, and that's my pivotal trend line. So, seemingly influential. After 2 more touches that are productive, there's only been 1 more touch, and it hasn't been productive, it hasn't produced a fresh high. But its break can basically anticipate its parallel uptrending support, parallel to the actual low. I definitely want to honor 38's break. I want to know where the 3-minute low is. And when the 3-minute low is probed, I'm able to see. Now, if I have a stop, sell stop under 38, it's triggered. I want to have some kind of an immediately actionable risk control measure, something. Whatever it is I'm doing, wherever it is, it needs to be in place in case this was just some knee-jerk reaction to something else, unfortunately timed. Or just wait for the 3 minutes to identify its extreme and negotiate an entry around that, around the test of the sell. I will be a little surprised here if 38 is productive. I don't really want to have too much of an opinion this late in the day. Not unreasonable for the market, no matter how much it might intend to retest a high. As we come into the close, it has other matters to consider, like where is it going to close? Can it leave that retest outstanding for another blip up tomorrow that fails? So that, more importantly, the close is back under enough resistance that buyers haven't gained traction for their efforts. Bounce limit is 34.75. Notice the support at the bias up signal. Notice the sentiment extreme just in breaking lower. There's the prior touch of the trend line, the anchor and the connector. Just errant ticks or sentiment extreme, probing beyond it. Can't really call this ineffectual pessimism when ultimately it goes on, price goes on to lower lows, but it wasn't really this sponsorship that got that done. And this sponsorship might not extend any deeper until a bounce detours and refuels again. I think it's just a function of the timing window. It's so late in the day, and if ultimately this is near-term peak forming, then the closes are going to be more distributive, not going to be defended, and we could come out of tomorrow morning, or tomorrow morning could produce a bounce. We have post-open, we have PMI, claims pre-open. In the afternoon, tomorrow afternoon is going to be focused on Powell speaking Friday morning and potentially giving more or promoting more of a rate cut. So that could be bringing in intraday buyers, but meanwhile it's already pretty widely discounted. So not so much defense into the closes, which, as I described in the blog, closing back under 56.18 would, I'm not saying that that's where we're heading right now, but that would be so much as to suggest we're already rolling over. So if we're still going to retest today's high first, even in the most bearish scenario, still neutralize today's high, retest it, and then resolve down, that means we're just reverse engineering that. We're probably not going to close under 56.18 because that would be too late. I'll lower the buy signal if the bounce limit were probed. So reverse engineering, if the bigger picture says closing under 56.18, at that point pretty much seals this as a top and starts shifting the balance to trending down, then that means that any unfinished business above probably waits for a deeper pullback. So reverse engineering that, if we're anticipating that the unfinished business above intends to be neutralized first, then probably today doesn't close, or at least in the interim today, for instance, doesn't close yet under 56.18. So just more to that reverse engineering. By the same token, if closing above 50, as I said in the blog, 5640x, just above the 40s, like above 46, 48, just increasingly bullish to close above. If that is increasingly bullish and suggests that this flat to higher ranging intends to extend higher or launch a bigger up leg, and we're not not anticipating that will happen, anticipating that won't happen, a bigger up leg, then we'd expect not to close above there. So how do you, other than in retrospect, how do you apply that? Well, if we're this near the close, probing beyond either end, we'd want to fade that, expecting it to be retraced before the close. Parallel uptrending support. Bounce limit is 32. So the parallel uptrending support parallel to the pivotal uptrending support is being influential. I am not confident that it's going to be durable. It seems more obligatory. I mean, not that the market is aware of this trendline intersection. It's not structural. It's parallel to a structure, but other than that, as it is, breaking lower. So getting dangerously close to 56.18. But here's something else. This is an actual low. I'm sorry, this is an actual low. This is the low prior to the actual low, called the pivotal low. This is their interim high. Having probed their interim high, to whatever degree, just to this shallow few ticks or multiple points in the same timing window or days later, at any point, having probed their interim high, returning to the pivotal low all but requires, or would all but require, extending to the actual low. Bounce limit is 29. I'm sorry, 29.25. So basically, a shallower bounce that returned to the pivotal low back to 56.19 wouldn't have required extending any deeper before resolving up. But because this bounce was expended so much buying pressure that it did probe their interim high, if all of that buying pressure can be retraced by so much selling pressure as to test the pivotal low, not a proxy for it, but the pivotal low, then whatever developed from there, another bounce, delay, the objective would be at some point to actually test the actual low. And that becomes problematic as late as it is to get that done and still recover above 56.18. So reverse engineering that, if, again, we're still not anticipating a bearish resolution, or a signal at least, immediately, not without first neutralizing some upside attractions, then we can also anticipate that this won't dip deeply enough as to touch the pivotal low. So we'll be looking for candidates that would qualify as deep enough. Right now I've got a buy signal that would trigger above 35.50. depending on where the 3-minute high is to testing the bounce limit, we might be able to lower that buy signal. So there's the 3-minute high. It's kind of tight with 35's inflection, 35.25's inflection, or 35.50, sorry, it's inflection back up. So not a whole lot of room. It is the first reaction up off the previous trend's extremes, so I'd prefer to see that dip. This would be a preferable path back up, but we're running out of time, really.
DNC Day Zero outfit check. I just got in from the airport. I got these pants, they're secondhand. These are my airport pants. These are my do anything favorite black pants. My Air Forces, my vintage 2020 primaries Kamala tee, Prada bag, this sweater from Girl New York, which is actually so cute. I kind of want to take it off and show you, but I won't. A Columbia hat. Luggage is big.
So we're going to do the market wrap in just a few more minutes, but to point out, not as overt as, for instance, an earlier probe above the bias up target that we were discussing, but you can still see the bias up signal offering support, probed temporarily, offering support. So influential, in other words. It's not an inverted head and shoulders, but basically the same route. It's not too late for another signal to trigger. For this signal, for instance, it's only been pierced by errant ticks, to actually be probed and triggered and productive, or for another dip to extend. The nearest inflection, though, is back under 29. Or price just sits here through the close. There's no momentum. There's clear containment, influential support, and here's that 37.38 bounce peak resistance, as much an attraction as ultimately a repellent. But be right back in a couple minutes for market wrap. right, it is Wednesday afternoon and time for Market Wrap. Pretty outrageous morning, huge swings. As I said in the blog, just the width or distance of the reversals, kind of impressive, but more so how quickly the reversals developed. And then also how substantial their quick reversals were, but then how productive those quick reversals extended, literally back to their origins, through them, ongoing, carving out a range that has pretty much encapsulated price action since this morning, since the range was created. But we're back into pretty pliable action. In other words, the market has some pretty extreme opinions and continues to express them throughout the day repeatedly. Just an argument back and forth. As for today, just putting this in the bigger picture, probing prior highs. Yesterday probed prior highs. Just an ongoing series of intraday probes above prior highs, working on a potential up-down crash setup. We'll talk about that tomorrow. But for today, for today's purposes, just to point out the 31 level that had been tested by a complex ascending triangle into Monday's close, probed overnight, retested yesterday morning, yesterday afternoon, spindled around basically all day today, and now overlapping at the close, presumably. This still not right at the close, but bearing down on it. And by the way, open and close, maybe they're precisely the same. Ultimately, the opening print was 31. And maybe the close will just be, the closing action will just be overlapping it as it is, or actually print 31. But that is on a daily bar. That is a spinning top candlestick, pretty indicative, or a little more. That's one of the instances where a candlestick chart, kind of more illustrative of the price action just at a glance. But it's the same price action. Technically, we can observe that we've got the same open, same close, equilibrium between the open and close despite probing either end intraday. And when we can add the flavor or the color of how substantially, as I just described, these intraday price reversals and repeated price reversals, trying to get all my adjectives in here, repeated, substantial, sharp, or steep price reversals. Repeated, multiple. Anyway, and then ultimately just to be closing at the open, and the open itself being a relevant level. That suggests, when that's preceded by multiple consecutive trending sessions, that suggests the trending is at least at an impasse. I have a setup I call the stalled trend. Stalled trending develops after multiple consecutive sessions of trending, and then multiple consecutive sessions of inability either to extend the trend or to be reversed. And so the trend is entrenched, but not attracting stronger handed sponsorship to extend it. So the entrenched trend retraces, in this case for an uptrend, retraces back down, discounting itself to attract stronger handed buyers to sponsor the next up leg. Similar to that. So even if that retracement, this isn't actually my stalled trend setup, but it's the same basic principle that we're not attracting strong enough handed buyers to extend the rally despite the underlying interest in doing so, or rejecting it despite the underlying interest in doing so. So some sort of a reaction down, reversal, or retracement needs to take place, whether it does find or attract stronger handed buyers to sponsor another up leg, or gets out of hand and just extends down. Either way, that's basically what today's session is telling us. Now, there is unfinished business left outstanding at today's high, 55.25. Simultaneously overbought 1 minute and 3 minute RSIs require a retest. So, not a deal killer if a reversal down were to develop. So, for instance, if tomorrow's open were to gap under these prior lows, it's not indicated. Closing under 56.18 would have indicated that. Instead, gapping down under 56.18's tests would now indicate trending down. There's an attraction to unfinished business from yesterday morning at 56.04 that could help do that, and is perhaps even weighing down rallies from being able to extend, reflecting that stronger handed sponsorship is sellers and preventing rallies from developing. So, but that said, unless tomorrow is gapping down at the open, I'll expect that today's high will be retested before any other reversal down can extend. Having said that, note that 56.55's overbought RSIs can be retested overnight and neutralized. The unfinished business, now officially unfinished business above, requiring a retest, doesn't have to be conducted intraday just to neutralize it. By the same token, we didn't close under 56.18 to seal the top while simultaneously reversing momentum down, and not closing above 56.40x. And it's so late that even if this were to surge a dozen points, it still wouldn't qualify as that close. Too late. Sponsorship too last minute to be strong-handed. When it matters, we're even under 56.40, if not nearby overlapping 31. So that didn't happen. So if the rally wants to extend, intends to extend, it'll probably gap up and maintain a gap up above today's highs tomorrow. It's not like there aren't catalysts. There's a couple of higher profile, reliably influential to price action reports. There is jobless claims pre-open, PMI flash post-open. Nothing else that's reliably influential. I don't know what kind of Fed speakers we have. None are already booked. Probably none this close to Jackson Hole, which is Powell speaking Friday morning. That likely interferes or maybe even paralyzes price action from anxiousness tomorrow afternoon. So, just taking a quick look at this. We had a pivotal uptrending support break, extend to its parallel uptrending support. And just to point out that pivotal high had been probed, and so to whatever degree, whatever duration, to eventually return to the pivotal low, the low prior to the actual low, would require also testing the actual low. So in order to, and that would have been problematic to the 5618. So in order to keep not necessarily upside momentum alive, but just an attraction to or proximity to overbought RSIs at the high and not enable downside momentum, that pivotal low needed to be avoided, and it was. Very last minute action, otherwise irrelevant. Ultimately holding above 56.31. It's so late, and we were into the position scoring window when 31 was last touched. And 31 was influential. You can see it being supportive here. I'm still going to consider this as not, more as an equilibrium session. So the most bearish scenario here would be an overnight probe to whatever degree that neutralizes 55's overbought RSIs and greets the open. By the way, having probed intraday highs overnight, reversing back under the Globex opens range, forming a bearish Globex flip, and then maybe even opening under 31. Or could it have been reversed to such a degree that the open is actually back under 56.18? So we want the most bearish scenario to know what that would be. That's the template, and each of those features being increasingly bearish. So not forming all of them, still leaves some on the table that could be developing through the open. And therefore, the alternatives would be bullish. Being attracted to 56.55, but not being rejected. Maintaining a flat to higher open. Staying away from 31, let alone 18. And restarting upside or uptrending to be attracted to the 56.74 high of the trend reversal. We're in proximity to it, but we're actually testing its initial slide that itself was retraced by 61.8%. So that's a pretty big, it's pretty close by. It's a pretty big rejection not to get there. We'll look at that tomorrow morning as well. Any questions about any of that? Please ask. As far as other markets, starting with Bitcoin. Pretty good day for Bitcoin, and pretty good afternoon, actually. So, I'll need to change trendline colors, but basically this is the lower end of a channel, probed by uptrending support. Upper end of the channel, probed or pierced more so. Now being retested. Again, there's really no bearish reason to be resetting all the way back at the upper end of the channel. Except that the lower end of the channel most recently wasn't probed. So we're not actually isolating sellers. That's a break. I would even consider this to be the break as marked. Back above 59.9. And I'm sorry, let me get a pullback limit involved here. Pullback limit is 40.25. So regarding Bitcoin's break, I would consider this 59.9's resistance to be the actual indication of a breakout. Why is that important? Because it's a much greater threshold as it is now and may continue to be. We don't have actual closes, opens, and closes in a 24-hour market. My methodology considers a 24-hour window to represent a close. So if the breakout occurs here above 59.9 at 2 o'clock this afternoon, then maintaining that break through 2 o'clock tomorrow afternoon is a breakout. A second consecutive higher close would confirm. So that means Friday at 2 o'clock to have extended above whatever that first 24-hour window's extreme is. At that point, we've got this massive ascending triangle. And whether it's just a bigger detour or actually dismissing the downside attractions to attacking or testing the low, that would be a breakout, and that would be on its way to much higher highs, potentially back to the highs, even just to correct. Don't forget, this was the level previously, 61.1. Its probe not maintained for a 24-hour window. And since then, a relatively deep pullback had to develop. And if that's the price to pay, the not only depth, but the duration, until finally trying again, then it may have been time well served. If this next attempt, which I'm willing to be aggressive and start the countdown at 59.9 instead of this more recent probe above 61.1. I would still want to see 61.1 recovered through that 24-hour window for confidence sake. And by the same token, if this 24-hour window lapses back under 59.9, or if the confirmation session the following day at 2 o'clock Friday is back under 59.9, let alone back under the last relative low, being confirmation day, at that point back under 58.8, that could not be more bearish. So right now, for the breakout's sake, maintain the recovery above 59.9 through tomorrow at 2, and then through Friday at 2, extend to beyond whatever the interim high was. And preferably not just 59.9, but 61.1 today. The bearish scenario would, by 2 o'clock tomorrow, have retraced not just under 61.1, but back under 59.9. Or the confirmation session, even if that breakout were fulfilled, the confirmation now needs a greater threshold, in this case lower, back under its last relative low, under 58.9, to isolate this optimism, to correct for it with pessimism. I'm not going to guess at how many times that can develop, but that would be the bearish scenario. So let's take a look at others and see in the same space what else is underway. Not great confirmation from Ethereum. Solana already outperforming both and yet not extending. So pretty Bitcoin specific, which doesn't prevent extending. But it would certainly be more confident to have the universe participating, and it's not. Any questions about any of that? Please ask. Let's look at other markets. So, except for the yen, which has its own multi-intervention rally, axiomatic that it's probably temporary, but still needs to get, no matter how substantial it is, this second try, but still has not necessarily unfinished business. Any other market than currencies, 70/70's gap above all prior highs would require being filled. I'm assuming it's going to be filled. At least that's the attraction. The euro overthrowing, just getting more parabolic, overthrowing its uptrending resistance. And then some, extending so much more substantially today, holding its pullback limits test. But just to put this in perspective, we've got 8 consecutive sessions of closing higher, basically cycling higher, with one exception. 10 or 11 consecutive sessions closing higher with one or two allowable lower closes so long as they're non-consecutive. And this rubber band will have been stretched to the point of one of two results being likely. The third result being flat, and that's possible. But think of a rubber band being stretched and that being the point where it snaps back down, or where it breaks and whatever energy was stored in the attempt to prevent extending higher suddenly becomes an explosion higher. So just to get a bearing as we come in on this, and also we're going to be looking at that in another market that's set up. Not that it gets to that extent. The pound is well getting close, but these are pretty extended. Gold and silver had huge reversals today. Big reversals from having gapped up yesterday and then gapping down further today, trying to reverse, instead holding their pullback, gold holding its pullback limit. The gap, 25.68 above all prior highs, requires being filled from below. Silver's gap at 29.96 yesterday, above all prior highs. Now that a prior session's range has been touched, that becomes unfinished business above. Not as big of an overnight dip for silver. Still opened weaker and closing positive. Long bond firming further. Its gap above all prior highs, 126.09, does require being filled. We've been able to arbitrage against that. And then crude oil just extending its decline. And that's back to the prior low, which is not bullish, because that prior low, that was fulfilling a sell signal. A pretty massive reversal that had required filling. Well, we don't have enough room here. Required filling this gap open under all prior lows. I mean, that was the mother of all detours. Can you say that? Huge detour. And still came back to neutralize this unfinished business's gap under all prior lows. And having neutralized it, was able to bounce and could have developed into a rally. Even signaled such. Just needed one more higher close, a confirmation, and it didn't develop. And in its place, a rejection did develop. And that has returned to the low. No bullish reason, no bearish, just no reason to return to the low. It's already been neutralized. So typically, if that develops, it's because the market intends to extend the trend. And I don't see anything in the chart that suggests otherwise. So cash session close got out to 40. How high did we get? We closed at 40. Basically testing 44. Nothing really predictive about that. In proximity to the morning's high, could be retested overnight and already reversed. Or attractive to resume the rally tomorrow. Either way, should be a pretty attractive day, pretty volatile. Any questions, let me know. But meanwhile, thanks everyone for being here. Have a great night. Take care. And so I had thought we posted this earlier. I've gone ahead and done it, added this link in the YouTube room. There's a special offer if you're interested. You can always come to the site and sign up for a free trial and get a free week, full run of the site. You don't get to make stock requests, chart analysis requests, but that's really it. You can join any vidiROOM function all day long and have full access to the site for free for a week. And then if you subscribe, if after the week you remain active or don't cancel, you can cancel anytime, but if you haven't after a week, you'll get the vidiROOM for free for the first term, which is normally $200. Alternatively, if you think you're going to subscribe, if you want to give it a full month and more, I suggest committing right away to this special offer that gives you the vidiROOM for free for 3 terms. So that's $600 saved. So if you think you've already had enough of a free look that the free trial otherwise would give you, but not give you the 3 terms, just give you 1 term of the vidiROOM, this is obviously the way to go. Take advantage of that. Any questions before you subscribe or in subscribing, definitely reach out to me. But thanks for dropping in. Hope you were able to glean something useful at least. The YouTube room is going to close shortly. So if there's any links or any information from it, screenshots that you want to grab, be sure to do that now. All right, thanks everyone. All right, it is Wednesday afternoon, time for market wrap. Pretty outrageous morning, huge swings. As I said in the blog, just the width or distance of the reversals, the 56.74 high of the, we'll look at that tomorrow morning as well. They don't need to change trendline colors. So they don't need to change trendline colors, but basically this is the lower end of the channel, probed by uptrending support. Upper end of the channel, probed or pierced more so. Now being retested. Again, there's really no bearish reason to be resetting all the way back at the upper end of the channel. Except that the lower end of the channel most recently wasn't probed. So we're not actually isolating sellers. That's a break. I would even consider this to be the break as marked. Back above 59.9. And I'm sorry, let me get a pullback limit involved here. Pullback limit is 40.25. So regarding Bitcoin's break, I would consider this 59.9's resistance to be the actual indication of a breakout. Why is that important? Because it's a much greater threshold as it is now and may continue to be. We don't have actual closes, opens, and closes in a 24-hour market. My methodology considers a 24-hour window to represent a close. So if the breakout occurs here above 59.9 at 2 o'clock this afternoon, then maintaining that break through 2 o'clock tomorrow afternoon is a breakout. A second consecutive higher close would confirm. So that means Friday at 2 o'clock to have extended above whatever that first 24-hour window's extreme is.